Hello Trade Pros, this is Victor from Trade Pro Academy, and today we've got another special video for you. What we're going to be going over is the only way I profit from my support and resistance levels. It's an easy 4-step strategy and protocol that I follow on a day-to-day basis to help me profit from the levels that I've drawn. Now, this is the highest probability trade I personally take, and I'm going to show you guys how I do it. Now, if you guys want a little more information on some order flow stuff, if you want the confirmation stuff we're going to talk about today, if you want to learn about order flow and increase the probability of your next best trade, click the link down below in the description and you will find a free order flow trading course. Now, let's get ready for this little lesson. Smash that like button, hit that subscribe button if you haven't already, and we are about to get going. Let's take a look at what we have on the screen. So it's going to be a 4-step process, guys. This is an easy 4-step process, and each step individually is pretty simple, but when we put them together, it becomes super powerful. So what we have here on the screen is a 10-tick chart of the ES. Now, keep in mind, you can use this strategy for any product. I personally trade the ES. I prefer the ES. So we're going to be looking at this on a day trading basis for this futures market. Now, step number 1 of this process strategy, call it what you will, but we have to draw our zones. Easy as that. How do we draw our zones? How do we know that they're going to be levels of confirmation? Our zones are our support and resistance levels. So what I look for is on a larger tick chart, so a macro view, let's say, so a 10 tick or a 24 tick. In front of me, we've got the 10 tick, and I look for areas of very extreme rejection. So those are going to be really strong zones. So we have one right here, we have one right here. We can kill a lot of the clutter of these lines that I use today, actually, to day trade. But if we want those super extreme levels, we clear the clutter and we just draw these extended extreme zones that have shown signs of rejection, right? So if we clear the screen and we redraw some of these levels, what does that look like? Let's take a look. So having cleared everything, we're just looking at peak areas of rejection. If this looks too noisy for you, easy as that, we change it to a 24 tick. So we look for those areas of rejection that we can draw our zones, our support resistance, call them what you will, but areas that we're going to be looking to trade off. So one of the levels, it's a pretty noticeable extreme. It's right here. Another one right here. Now the difference between these two zones is about, what is that, about 17 points. What we want to make sure is that they're pretty far apart because we're going to be super patient for these trades. We can draw another extreme right here. We have one down here. Let's call it somewhere up here. You can see it even comes together with another prior area of support resistance, and this one down here. So what I've drawn is only just a few lines to capture just the most immediate price action, because if we fall from here all the way down here, we've dropped a pretty significant amount. There's going to be trades to be had within that area, and then once we get through these levels, we could draw more lines, easy as that. But to keep it simple, what we're doing is we're drawing zones, support resistance lines based on strong areas of rejection. That is the key premise to this trading strategy. Step number 1. Step number 2, what we're going to do on a macro view, so something like this, depending on what your macro view is for a day trade, I'm using the 24 tick chart, I'm going to identify what the market structure is, because this process for trading off these support resistance levels is based off market structure naturally. So what trend, we are going to follow the trend, what trend are we in? Pretty clear uptrend for the most part, especially over the last few hours here, this day session, we are in a clear uptrend. That means that my trade is going to be a long trade. That's all it identifies. What we're going to be looking for is a long trade. Now, to confirm market structure in the uptrend, what has to happen? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And this is going to be a very important aspect to remember and to know when looking at this trading process. So remember, for market structure to continue, we have to continuously print higher highs, higher lows for the bull side. For the bear side, lower lows, lower highs. So we're following the trend here. Once we've identified that we're in a bull trend, naturally, and we've identified that this is what the bull trend looks like, higher highs and higher lows, there's one key little pattern that we should be aware of. Let me just zoom out here so we can actually draw it. Now remember, bull structure, higher highs, higher lows, higher highs, higher lows. This is step number 3. To continue this bull structure, what has to happen? We have to print a higher high and a higher low, a higher high and a higher low. So the only way to continue this bull side structure for me to get long is for this trend to continue. So what I'm looking for is a very simple pattern through my resistance zone. This is my resistance zone, and all I'm looking for is a break of the resistance zone to confirm a higher high, right? This is the resistance zone from this peak, this key peak that was rejected. And then I'm looking for the retracement of that resistance zone for the continued move to the upside, picking up the long somewhere here. How easy is that? Super simple. This is the only way I look to profit from my support resistance levels. To confirm the structure, I just want to see a key resistance point break in the bull side and retest it. Super simple. To the downside, what has to happen? Lower lows, lower highs, lower lows, lower highs, right? We have a key support structure right here. Once it breaks, I'm looking for the retrace into that support structure because this support turn resistance creates a strong level. Now, the difference between this zone and any other zone, the zones that we draw and any other zones that you may look for, any other support resistance points, the main difference, the key to this, the reason why this is the only way I trade off these support resistance zones is that these support resistance zones are based off extreme areas of rejection. So if a level is tested multiple times, like here, this double bottom, this becomes a key level of rejection. So what happens through this area is going to be a sell stop wave to the downside that breaks under. And what I'm looking for is very simple. Let it pull back into that area, and to confirm that structure, we're going to continue to the downside, right? So in this critical example right here, we've mapped out a very peak rejection point, right, somewhere here. And what happened? We got a slight pullback, not the greatest of confirmation. So that's step number 4. This is where it gets even more interesting. We wait for confirmations in 2 parts. 1, rotations, right, at that key level. 2, order flow. So using these 2 confirmations in step number 4, we're confirming the level and seeing if it'll hold to the upside structure, right? So we broke through this peak, but we didn't hold the support structure. It's okay, sometimes this doesn't work, right? It's not 100% guaranteed, but we increase the probability by looking for this one way and waiting for those areas of rejection to break. So right here, this was a peak, strong peak of rejection. What did we see through that level? We got the break, and then we got the retest. We got our rotations, and order flow, if we look at the footprint at that same time, indicated that we did get some buying interest and potential for the buy side. Same thing right here. Obviously, it's not going to work to the tick, but what we got is a pullback and continuation higher. Now, off these broken highs, I want to see it reject the level pretty strong, pretty well, and through that break and retest, we're going to get a good chance for the upside. It's the same thing to the downside if we grab some of these examples, right? What we're looking for is key areas of support resistance to the downside that get broken and rejected, right? You got 1, 2, 3, 4 peaks, a slight little head fake. If we count all of them, so look, it goes 2 ways. You get this peak right here and these peaks right here. So you have 2 opportunities here. Same thing to the downside. What happens here? You get the break and the retest, and you're good for a decent amount of points. Then you get the secondary retest of these broken rejection points. Downside does continue. So that's what we're going to be watching out for. A simple 4-step process. Now, this was the only way that I look to profit from these extreme support resistance levels. Now, there's other strategies that we use once we follow the market structure, but this is the simplest way and the most patient way to keep you out of trouble to look for some of these very high probability trades. Now, what makes these trades and opportunities stronger is key rejections. So we're looking for peaks that got rejected aggressively, right? Not by a few points, but tens of points, even 10 to 20 points of rejection, and you're patiently waiting to see what happens on the other side of those. Now, this is Victoria from TRADEPRO Academy. I hope you guys like this video. Smash that like button, hit that subscribe button. Remember, down below we got that order flow free course for all of you if you guys want to learn how to identify those high probability trades and confirm your trade ideas with order flow. Now, join us next time for a great video. Drop a comment down below. What do you guys want to see in our next video? We could talk more about strategies, we could talk about market psychology, and much more. So thank you for joining me, and we'll see you next time.